Today, we'll be focusing on SoFi, analyzing the latest data points and trying to understand what's really driving the market's reaction.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi saw a decline of 1.21%, and what's surprising is that this drop occurred without any significant news. It seems the market is behaving more emotionally than usual, reacting to speculation rather than facts. The current chatter suggests that Jerome Powell, in his upcoming Friday speech, might avoid discussing monetary policy, which has led to a lot of assumptions and market movement.
Initially, there was an expectation of a 50 basis point adjustment.
But now analysts are predicting otherwise. It's almost laughable how speculation can drive such significant market reactions, leaving even someone like Powell likely bewildered by the unpredictability of it all. Interest rates are the big focus now, with everyone watching the September 18th meeting closely. As of now, there's a 67.5% chance of a 25 basis point cut and a 32.5% chance of a 50 basis point cut. The market's reaction to this uncertainty is intense. Meanwhile, SoFi's price movement has been influenced by the return of 2.18 million shorted shares, which usually adds buying pressure. However, despite this, the stock ended the day in the red, which seems to be more of an overreaction, a common occurrence in these volatile times. Let's delve into what happened today. The dark pool, where large institutional trades occur without affecting the market price, was highly active. For those who might not be familiar, when shorts return shares, it typically adds buying pressure. But if these transactions are diverted to the dark pool, the stock price isn't directly impacted. This practice allows shorts to cover their positions without causing a price increase, which can be a bit questionable. In the secondary market, there was significant selling in the first 30 minutes of trading, setting a negative tone for the day. Looking at the options data, we saw 3.33 million in calls and 1.66 million in puts, with 50% of the options being bearish. Among the call options, most were betting on a price range between $7.50 and $8, while the puts suggested a target below $7. This data puts SoFi at a crucial point, balancing between key support and resistance levels. The open interest in options shows 31,000 contracts at the $7 strike price, and a sharp increase in volume on Monday and Tuesday. Similarly, there are 27,000 contracts at the $7.50 strike, which acted as a secondary resistance, explaining why the stock bounced off that level. It appears that market makers are aiming to keep the price within this range, reflecting a broader strategy to control volatility. SoFi remains a stock with strong potential, and despite the market manipulation, it continues to be a key focus. The levels to watch include the pivot points at $7.25 and $7.97, with the $7.46 mark representing significant resistance as we approach the end of the week. The upcoming FONC meeting minutes, jobless claims on Thursday, and Powell's speech on Friday are all expected to introduce further volatility into the market. Currently, SoFi closed at $7.37, placing it between two critical price points. The daily chart shows a bounce off the $7.25 level, indicating short-term support. However, on the 4-hour chart, the $7.46 resistance is significant. If we receive favorable news from the FONC minutes, we could see a push towards the $7.50 range. But with the stock now showing a higher percentile in the stochastic indicator at 62, it suggests that SoFi is entering overbought territory. Historically, this has led to pullbacks, especially if there's broader market weakness. In summary, this week is shaping up to be highly volatile, with potential swings in either direction. If you're a long-term believer in SoFi, these dips might be seen as opportunities to buy at a discount. However, the market is unpredictable, particularly with the influence of monetary policy and interest rates. Today, there was an interesting shift in the odds for a 50 basis point cut from 22% to 32%, adding another layer of complexity to the market outlook. As we approach the September 18th meeting, the market's response to a 25 basis point cut will be crucial, and even a follow-up cut on November 7th could drive the market higher. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.